Hey Canada, feeling overwhelmed by taxes? Don't worry, we are breaking down everything you need to know about Canadian taxes in the next 3 minutes. Whether you're filing for the first time or just need a refresher, this is your guide to Canadian Tax 101. Let's dive in. First, let's talk about the 4 types of income the Canada Revenue Agency recognizes. Employment income is your regular paycheck from your job. This includes salary, wages, tips, and bonuses. Business income applies if you're self-employed, freelancing, or running any kind of side hustle. Property income covers rental income from real estate investments or any property you own. And capital gains, that's the profit you make when you sell investments, stocks, or assets for more than you paid for them. Here's how the tax system actually works in Canada. Your employer automatically deducts income tax, Canada Pension Plan contributions, and employment insurance premiums from every paycheck. These deductions get sent directly to the Canada Revenue Agency on your behalf. At the end of the year, you'll receive a T4 slip that shows your total earnings and all the deductions that were taken. This is why some people get refunds. They had too much tax taken off their paychecks. Now for the key numbers you absolutely need to know. The basic personal amount for 2024 is $15,705. Meaning the first $15,705 you earn is completely tax-free. Your tax deadline is April 30th every year or June 15th if you're self-employed, but you still owe any money by April 30th. File late and you'll pay a 5% penalty plus 1% for each additional month. Canada has a progressive tax system, so the more you earn, the higher percentage you pay in taxes. And here's something most people don't know. You should file your tax return even if you didn't work or earn any income. Why? Because you could be eligible for the Canada Child Benefit if you have kids. That's up to $7,787 per child annually. There's also the GST or HST credit for low-income individuals and families, plus other provincial benefits and credits. The government can't give you money if you don't file, so don't leave benefits on the table. To file your taxes, you'll need your social insurance number, all your T4 slips from employers, T5 slips for investment income, and receipts for any deductions you're claiming. Common deductions include RRSP contributions, medical expenses over a certain threshold, home office expenses if you work from home, and charitable donations. Keep all your receipts because the CRA can ask for them up to 6 years later. Remember, tax planning isn't just about filing once a year, it's about making smart financial decisions all year long that can reduce your tax burden. Contribute to your RRSP, track your expenses, and stay organized. That's Canadian Tax 101.